regular insight viewers recognize it right away. It's a valuable resource in planning and sustaining your retirement. It's Heather Foster, investment advisor and fiduciary. Today we want to talk about the approaching tax deadline. You know, we got through April, and when it got extended, I think perhaps some people kind of put it to the side. Well, it's now here, and they've officially announced that they're not extending it again.
Yes. So obviously, you know, that was a good thing, I guess, that they extended. But a lot of people went ahead and got theirs done. But even if you got yours done, you still have some opportunities to maybe even amend your tax return, because what we want to talk about is like the deadline for making contributions, HSA contributions, things along those lines. That gets into more of the tax strategizing piece, where maybe again some of your income went over the next tax bracket, especially if it's the jump like from the 12 to the 22. That's a pretty big extra hit. So maybe you want to make a contribution into some sort of pre-tax program. It doesn't have to be a traditional IRA. It could be an HSA, something along those lines. You know, by July 15th, you can still do those types of things. But yes, as we head into the holiday weekend, I thought it was important that maybe we just remind everybody that deadline still does exist. And you want to sit down and do some strategizing before that, because we're going to all have a good time this weekend. And then we're going to come back on Monday, and we've got just a few days left then to do any kind of strategizing before that deadline hits. And as everyone should know, those deadlines for making those contributions are set in stone. You can't go back and make any additional contributions after the fact. So if the deadline for a contribution was April 15th, it's now July 15th. Those things still need to be done, as well as like your first estimated tax payments, the taxes due, all those things are going to be July 15th. So just don't wait to the last minute. I know CPAs, they're going to be busy next week. Right. Even financial planners that do a lot of tax strategizing, we're going to be really busy next week kind of finishing things up if anyone did wait to the last minute. So I would just encourage you, actually, before the holiday begins, if you've already even filed your taxes, or you're about to file your taxes and you know that you had some income maybe go over, or something throw you over the health subsidy, there are some maneuvers that we can make to kind of push you back under, but we are up against that deadline, so you have to watch that.
Let's talk for a minute to those people who have already filed, and they thought it's a done deal. Like, I'm out of luck. I should start thinking about it for next year. So there perhaps is some things they can do to amend that filing?
So since the deadline got pushed, if you didn't think about this and you went ahead and just filed, and now you're going, well, actually, I did have a little bit of income go over to that next tax bracket, you can still make a contribution in, and even though you didn't claim that contribution yet, you can go then and amend your tax return. So it's really about the deadline of when can you put money in that's going to help offset your actual taxes. So, or creating things like capital gains, capital losses, making sure that your CPA knew everything. We see this a lot. People that do QCDs, or qualified charitable distributions, they forget to tell their CPA, hey, I know I gave to these charities, but I actually gave out of my IRAs. Anything like that, you've got time to fix those kinds of mistakes. But the big one is those contributions. They can really help offset taxes to a pretty large degree, especially if it pushed you from one tax bracket to the other. The other thing that we've made sure to set up for people is if you did Roth conversions, we talked about it a lot during March when the markets dropped so much. If you did those kind of large contributions, or you took advantage of the COVID stimulus that allowed you to pull money out of an IRA, and spread that tax liability over 3 years, make sure you've let your CPA know those things. A lot of them just calculate the taxes. You have to tell them, hey, I gave this money to the church or the charity from my IRA, or hey, I did a Roth conversion in March. Set up my estimated tax payments to cover that so that you don't get into a penalty phase next year. You've got to communicate that type of stuff, because most of them just take the 1099s, they input it into the computer system, and there's not actually strategizing going on. So it's just really important that people look at these things, and you've still got a little bit of time left to fix those. I'll give you an example, like a Medicare additional premium. If your income goes over a certain amount and you have to pay a penalty 2 years later, because Medicare premiums are based on the 2 years prior income, you could put a contribution in, perhaps, if you're eligible to do that, push your income back under, and then that premium would not exist in 2 years.
These are all important things. Those can make a real difference for you. If you need a second set of eyes to look at it, Heather Foster would be glad to do that. It's always good to have that second set for somebody to be checking it out. So give them a call today, 234-2200. Reach them online, fosterfinancial.net. We'll be right back.